trade and investing ideas by experts. My name is Neha Vashisht, and today we have Mr. Kranti Batini, equity strategist with WealthMills Securities. Thank you so much for joining us today on ET, Mr. Kranti.
Thank you, Neha. Always, it's my pleasure to share my views to all your viewers on ETMarkets Live.
Right. So let's start with the Q4 earnings season this week. We saw the biggest companies releasing their Q4 results. TCS, Delta Corp, and Infosys is also on its way to release its Q4 results. So how was it for the investors, and what are your thoughts on it?
First of all, Neha, if we have to analyze the data of the results, the earnings season, first and foremost is stock prices are slaves to earnings. When the earnings momentum is not there, then you can't expect the momentum to continue on stock market. So stock prices always slaves to earnings. So coming to the Q4 results are concerned, traditionally, if you see the Q4 results for India and Q1 results for US, those companies, the technology company who have a major presence, historically, traditionally, these Q4 earnings can be strong. If you have to analyze the results declared by companies like TCS, company results are not met the expectations of the analyst. But one thing we need to analyze is whether the company have not met the expectations of the analyst, or analysts are not able to meet the expectations of the companies, and vice versa. We need to question. They could not able to gauge the companies well. We need to see. But overall, there is a mixed views with respect to the results of TCS is concerned. But if I have to gauge keenly on the commentary of the company, okay, they're quite positive and optimistic with respect to their coming quarters business is concerned. The order book is in line, and there are no any kind of adverse impact on the US, the banking crisis, what we witnessed, and there is absolutely no order cancellation. And they're quite robust with respect to their order flow is concerned. So some kind of misses are there with respect to their margins are concerned, and a little bit with respect to the revenues are concerned. One thing, when there is a dichotomy, when there is a different opinions, there is a mixed views with respect to the earnings are concerned, that is the right time. Because if you have to see, the overhang about the US recessionary worries would be there in the medium to short term. But if a long-term investors are concerned, if you see the complete history of companies like TCS last 20 years, these companies' earnings are sustainable and robust earnings, and they are one of the wealth creators. So if there is a weakness in these kind of stocks due to these kind of knee-jerk reaction that comes in the market, retail investors need to take this as an opportunity, and a staggered manner they can keep these stocks. They can accumulate these stocks in their portfolio, because many new investors are entering into the markets, and all these few quarters they were chasing stocks in mid and small cap stocks, and because the price tag they see on the large cap stock, they don't dare to take into their portfolios. So these are the times they can cherry pick these stocks and accumulate in their portfolios, because always these business models are proven, and these large cap stocks give stability to the portfolios of retail investors.
Right, definitely. And moving to the next question, which is also related to Q4 earnings season, even HDFC is set to release its data on 15th. So what are the projections for that?
One thing is coming from the technology, IT services to the banking and financial services. Banking and financial services is core of India's growth story, and we can label the banking and financial services is the template for Indian markets. So coming to a major bank like HDFC Bank, Q4 the results can be a strong quarterly results. And one thing investors need to keep in mind is HDFC Bank has been trading right now 30% discount to its long-term valuations. So
Hmm.
one thing is the stock is have been in a consolidation phase due to the overhang about the merger, and also when the FIs keep on withdrawing from Indian markets, which what we witnessed in past 18 months. So HDFC Bank was it has been in a consolidation phase. So we can expect a positive results from with respect to HDFC Bank is concerned. One thing we need to see how the retail growth story is emerging, and also the commercial as well as rural segments, how they are going to position in the coming quarters. This is the major thing one need to watch with respect to HDFC Bank is concerned. But overall, we can expect a positive momentum kind of results from HDFC Bank.
Okay, okay. If we see the market data till 12th of April, Sensex rose for 8 straight sessions. And one of the reasons behind this is also non-stop FII buying. Can you explain this a bit for us?
Yeah, on a consecutive days, including today, we closed the market in the morning on Thursday. Market was in choppy, it was in a negative territory, but by end of the closing day, we closed on a positive note. So consecutively, markets have been rising. One thing, if we have to analyze the data, of course, as you rightly mentioned, that FIs have been the keep on buying and they have been cherry picking in Indian markets. That's what we were expecting. But one thing, one of the key reason also, FIs stopped selling. That is one reason which given the positive flip to the market, and it given the some kind of boost to the markets. But if we drill down further the data in the market right now, what we witnessed is just a fortnight back, there was a complete negativity in the markets. But right now, there is some kind of optimism we can see in the market, thanks to the global cues also. And the positivity that brought in Indian markets is Reserve Bank of India's view. In our last show, when we discussed about the monetary policies, there was a consensus view the RBI is going to increase 25 basis points. But contrary to the consensus view of the analyst and the markets, RBI have given a pause towards the rising of the interest rates. So that brought some kind of solace to the market right now. So that was the key reason markets have been going up. For first and foremost thing is FIA selling has came down, and FIA are the net buyers. They have been the net buyers that brought the optimism in the market, and we are right now at 17,750 levels. We are maintaining, but 17,800 level is the some kind of resistance zone for the market. We need to look forward how the market will sustain above these levels.
Definitely. I think FIs have definitely brought some kind of positivity to the markets amid all these crises that we are looking around globally. And before we move to the next question, I request the audience to ask questions in the comment box if they want to ask anything from Mr. Kranti related to stock market and today and this week's topics, issues, whatever you want to ask, just drop in a comment. And the next question is about US inflation numbers. So, US inflation numbers came yesterday and the numbers were lower than expected. As a result, gold and oil prices went up. So, can you explain for the audience the correlation and the upcoming effects of this data?
One thing, if we have to see whether these gold prices have been just a one-day impact, or it's just a spike of one day, we need to drill down. But overall, just to give a perspective how the gold behaves, gold fundamentals always gold. It's purely driven by the supply and demand. When the supply will go up for supply is go in a very slow pace, whereas the demand plays the very strong for the gold prices are concerned. First of all, gold demand will go up when normally in India there is a normal talk when there is a festive season, when there is a marriage season, the gold prices will go up. That is the normal general tendency of the normal view in Indian market. Whereas at a macro level, if you have to analyze the gold prices, when the economy is in an expansion way, when there is a when the prices of the dollar momentum, the supply of dollar is high, the gold prices tend to go up. And also when there
Right.
is a fear also, because the safest asset the gold perceived as, when there is a fear in the market, then also the gold prices will go up. Coming to when the economy is in an expansion mode, the oil prices will go up. When there is a tendency of a recessionary environment, or when there is a fear in the markets, okay, the oil prices will come down. So by and large, okay, these are the asset classes, the commodity classes, they get influenced because of the macro factors, and also the decisions that's taken by the Federal Reserve, who is the supply of dollars for the world economy. So
Right.
investors need to keep into cognizance. They need to have gold, of course, a part of their portfolio, but it's a safe asset. But they cannot expect a kind of results. What kind of results uh, given by equity markets? Always equity markets on a longer term basis, they tend to outperform the results of gold always.
Okay, so coming to our last question, which is also about US. So US Fed minutes also pointed towards a mild recession for the US economy. So what does it mean for India and the global economy?
First and foremost, Neha, while coming to the US recession worries that have been hammering the markets, and people has been very conservative nowadays, how the US economy is going to do. These are the worries every investor tend to have. Of course,
Right.
one and first and foremost thing the investors need to keep in mind, the underlying economy is quite strong. The global economy is quite strong. The fact of the matter is, and the global economy is quite resilient despite of the views expressed by the general public and also by the analysts. Coming to the minutes of Federal Reserve is concerned, of course, there is a concern for concern by the Federal Reserve Board with respect to the inflationary worries in US, and also if they have been tightening the global liquidity, and the economy can get into a recession also. Now coming to
Right.
the point here is how far the Federal Reserve is going to increase the interest rates, and the other hand, whether it's a mild recession, how deep the recession, and how long the recession. This is a bigger question. When the Federal
Right.
Reserve keep on increasing the interest rate, it's a lever. Uh, there just to make a soft landing. Whether the economy, the US economy, is getting to recession, whether how long this recession can be, and how
Right.
deep the recession, this is a bigger question for the market. But right now what we need to see is the underlying economy, the strength in the economy is strong, and it's very resilient right now for the company earnings are concerned.
Okay, okay. And just before we take some questions, I just want to know the basic market outlook for next week, or maybe like if any investor is there for short term, what is something that you will suggest the investors for the next week?
uh, Neha, market technically, it's look like a tidy. Okay, the valuations are attractive for Indian markets at these levels also. But technically speaking, we need to look for the levels of 17,800. These are the strong resistance zones. If market could able to overcome these resistance zone, and if the market could able to go just bit another 800 levels, market can be at 18,000 levels back. Okay, psychologically,
Right.
18,000 level gives a positive mood for the market, and market can further rally surprisingly also. So we need to, these are
Right.
crucial levels one need to wait and watch, because last 1 year, if you see, market came down below 18,000 levels more than 7 8 times, but it could able to go above immediately to 18,000 levels. But this is the time market has been spending more time to reach that 18,000 level. So the crucial level that investors need to keep in mind is 17,800 and above 18,000 levels. These are the levels one need to keep on their watch list to get some kind of positive momentum with respect to the short-term market conditions are concerned. But right now, what we have been witnessing in the market is the mid and small cap and the micro cap stock, which have been we can say under a sleeping mode from quite a long time, we can see some kind of resurrection there. We can see some kind of buying interest that's getting emerging in these spaces, in these pockets. So, but my suggestion for the investors is stick to the companies which have a strong fundamentals and also very good earning visibility, and tracking the company results is extremely crucial for the investors, and to look forward from the management how the company earnings are going to be in the next coming quarters. That is extremely crucial when a investor is initiating any kind of medium to short term calls.
Right, right. Okay. So now we'll move to the questions. We'll just take two or three questions. The first one is by Namsika. She's asking which IT pack one must have to keep in their portfolio with SIP for long term.
Yeah, definitely, this is the right time for investors who are looking forward for investing in IT stocks, that to direct equity. They can choose any of the large cap IT stocks, just to name a few. TCS, Infosys, and Tech Mahindra are companies like L&T Technologies. They can just keep on their watch list, and they can accumulate and use this weakness in the markets to build and add these stocks into their portfolios.
Okay, okay. And something related to IT again by Manish. Please suggest a small cap IT stock with which looks good for the investment. Small cap
Neha,
IT stocks, yeah.
yeah, Neha, this is not the time for a small cap and mid cap IT companies. Just to share, okay, but just to analyze, it all depends upon the what is the domain these companies are operating and what are the geographies they're operating. So it should be very stock specific. One need to keep in mind while investing in a small cap and mid cap IT companies at this time. Definitely, it's not the right time for a small and mid cap companies. If the investor have a high risk appetite, definitely they can look at companies subject to the domain they operate and also the geography they operate. These are the two
Right,
conditions one need to keep in mind. What we witnessed is, just to name a few, KPIT Technologies company. It has been a multi-bagger for the investor in past
right.
18 months. It's not a stock recommendation. The stock is in a consolidation mode. Okay, if there is any dip in these kind of companies, okay, one can look and take these companies into onto their radar before investing.
Right. And I think small caps generally are a little volatile in comparison to large cap and mid cap. So for a sector specific small cap is sounds a little risky, but I think you gave good options to the audience to choose from. And with that, we have reached the end of our segment. Thank you so much for joining us on ET Livestream, Mr. Kranti. Thank you so much.
Thank you, Neha. Always a pleasure.
I also want to thank the audience for joining us today. Keep watching ET Markets live stream for more investment and trading